In this video,
We're going to break down exactly what a high-yield savings account is so that you can stop letting inflation quietly steal your hard-earned cash and finally start getting paid just for keeping your money in the bank.
let's get into it.
The basics. What exactly are we talking about? All right, so let's start with the big question. A high-yield savings account, or HYSA, is exactly what it sounds like. It's a type of savings account that pays you a significantly higher interest rate than a traditional brick-and-mortar bank. We're talking sometimes 10 to 20 times more. You've probably heard the term APY floating around. That stands for annual percentage yield, which is just a fancy way of saying the total amount of interest you'll earn on your money over a year. While your regular old savings account might be paying you a measly 0.01% APY, a high-yield account could be paying 4 or 5% or even more. I'll explain why they can afford to pay you so much in just a second. But first, you're probably wondering if this is actually safe. The good news is, yeah, it is. As long as the bank is FDIC insured, which stands for Federal Deposit Insurance Corporation, your money is protected up to $250,000, so you don't have to worry about your cash vanishing into thin air. The secret sauce. Why do they pay so much? Okay, now you might be thinking, what's the catch? Why are these banks just handing out free money? Well, most high-yield savings accounts are offered by online banks. Since they don't have thousands of physical branches, they don't have to pay for real estate, massive electric bills, or tellers waiting behind the glass. They have way lower overhead. So they pass those savings on to you in the form of a higher APY. You give them your money to hold, they use it to make loans behind the scenes, and they pay you a big cut of the profits for the privilege. Stick around because next we're going to talk about a few hidden rules you really need to know before you move your money over.
By the way, if you're getting value out of this video, hit like, subscribe, and tap the notification bell to get more valuable content like this.
The fine print. Things you need to watch out for. So, you're ready to open an account. Awesome. But let me give you a heads up on a couple of things. First, keep an eye on variable rates. The APY is not locked in forever. It goes up and down based on what the overall economy is doing. If interest rates drop, your account's rate will probably drop too. Also, watch out for withdrawal limits. Some of these accounts still enforce a rule where you can only take money out up to 6 times a month without getting hit with a fee. It's a savings account, not a checking account, so you don't want to treat it like your personal ATM. Finally, check for minimum balance requirements. Some banks want you to keep a certain amount of cash parked there to get the best rate. All right, so what does this all mean for you? It means you have a totally safe, incredibly easy way to grow your emergency fund or save up for a house down payment without taking on any crazy stock market risks. You're just letting your money make more money while you sleep. Keep in mind this is just for educational purposes and not official financial advice, so always do your own research.
If this video helped, leave a comment below. If you want to keep learning, check out this video next. Thanks for watching, and I'll see you in the next video.